Here's a summary of Alphabet's Q1 2026 earnings call, designed for easy reading. Overall performance. Alphabet delivered a terrific quarter for Q1 2026, exceeding expectations with strong momentum driven by AI investments. Consolidated revenue reached $109.9 billion, a significant 22% increase year-over-year, or 19% in constant currency. Net income saw an impressive 81% surge to $62.6 billion, with earnings per share rising by 82% to $5.11. Key financial metrics. Revenue. Consolidated revenue, $109.9 billion, plus 22% YOY. Google Services revenue, $89.6 billion, plus 16% YOY. Search and other revenue, $60.4 billion, plus 19% YOY. YouTube advertising revenue, $9.9 billion, plus 11% YOY. Network advertising revenue, $7 billion, minus 4% YOY. Subscription platforms and devices revenue, $12.4 billion, plus 19% YOY. Google Cloud revenue, $20 billion, plus 63% YOY, exceeding $20 billion for the first time. Other bets revenue, $411 million profitability, operating income, $39.7 billion, plus 30% YOY, operating margin, 36.1%. Google Services operating income, $40.6 billion, plus 24% YOY, with a 45.3% operating margin. Google Cloud operating income, $6.6 billion, tripled YOY, with a 32.9% operating margin. Gross margin, not explicitly stated as a consolidated figure, but the transcript details cost of revenue and operating expenses, showing a healthy increase in operating income despite rising costs. Cash flow. Operating cash flow, $45.8 billion. Q1 2026, free cash flow, $10.1 billion. Q1 2026, backlog. Google Cloud backlog, nearly doubled sequentially to $462 billion, driven by enterprise AI offerings and TPU hardware sales. Management's forecasts and outlook. Q2 2026 expects an FX tailwind of approximately 1% for consolidated revenue, a decrease from the 3% tailwind in Q1. Full year 2026 CapEx, updated guidance to $180 billion to $190 billion, an increase from the previous $175 billion to $185 billion, to include investment related to the acquisition of Intersect. 2027 CapEx, expected to significantly increase compared to 2026 due to unprecedented demand for AI compute resources. TPU hardware sales, a small percentage of revenues expected to be recognized later in 2026, with the majority in 2027. Revenue from these sales will fluctuate quarterly. Cloud operating margin, expects a low single-digit percentage point headwind for the remainder of 2026 due to the acquisition of Wiz. Significant risk factors. Compute constraints. Management acknowledges being acutely constrained by compute capacity, impacting the ability to meet all demand, particularly in cloud. Supply chain and inflation. The company is factoring in a complicated supply chain environment and potential price inflation into its CapEx forecasts for 2026 and 2027. R&D investment. Significant investment in AI talent and infrastructure will continue to put pressure on the P&L through higher depreciation and data center operational costs. Highlights. AI as a core driver. AI investments in a full stack approach are demonstrably driving performance across all business segments. Cloud acceleration. Google Cloud saw a remarkable 63% revenue growth, exceeding $20 billion for the first time, fueled by strong demand for AI products and infrastructure. Gemini momentum. Gemini Enterprise experienced strong momentum with 40% quarter-over-quarter growth in paid monthly active users. Gemini app, driving adoption of consumer AI plans. First-party AI models, processing over 16 billion tokens per minute, up from 10 billion last quarter. Search growth. Search and other revenue grew 19%, with AI experiences like AI Mode and AI Overviews increasing user engagement. Queries are at an all-time high. Subscription growth. Consumer AI plans and overall paid subscriptions reached 350 million, with YouTube and Google One as key drivers. TPU and infrastructure leadership. Continued innovation with 8th-generation TPUs, alongside NVIDIA GPUs, offering diverse compute options. Agentic workflows. Internal use of anti-gravity is transforming workflows, and external agentic experiences are being developed for consumers and businesses. Acquisition of Wiz. The acquisition is a strong fit, exceeding expectations and enhancing cybersecurity offerings. Waymo expansion. Launched in Nashville, now operating in 11 major U.S. cities, and surpassing 500,000 autonomous rides per week. Universal Commerce Protocol, UCP, gaining significant industry traction with new members like Amazon, Meta, Microsoft, and Salesforce, aiming to transform agentic commerce. Lowlights. Compute constraints. The most significant lowlight is the ongoing constraint in compute capacity, which is preventing the company from fully meeting the overwhelming demand, especially for Google Cloud. Network advertising decline. Network advertising revenue was down 4% year-over-year. Other Bets operating loss. Other Bets segment incurred an operating loss of $2.1 billion. Wiz acquisition headwind. The acquisition of Wiz is expected to create a low single-digit percentage point headwind to Cloud's operating margin for the remainder of 2026. Most important statements from CEO Sundar Pichai and CFO Anat Ashkenazi. Sundar Pichai's CEO. It's clear that our AI investments and full-stack approach are driving performance across our business. This encapsulates the core message of the quarter, highlighting AI as the primary growth engine. Cloud accelerated again this quarter due to strong demand for our AI products and infrastructure. Revenue grew 63%, exceeding $20 billion for the first time, and our backlog nearly doubled quarter-on-quarter to over $460 billion. This statement underscores the immense success and growth of Google Cloud, directly attributing it to AI. We are unique in the market because of our vertically optimized AI stack and the way we co-develop components from infrastructure and models to platforms, tools, applications, and agents. Pichai emphasizes Google's competitive differentiation in the AI landscape, citing their comprehensive approach from hardware to software. We are genuinely differentiated. We're unique in the market because of our vertically optimized AI stack. This repeated emphasis highlights their confidence in their integrated AI strategy. Anat Ashkenazi, CFO. We had an outstanding first quarter, delivering our 11th consecutive quarter of double-digit revenue growth. Consolidated revenue reached $109.9 billion, up 22%. This provides a clear, high-level financial overview of the company's strong performance. Google Cloud's backlog nearly doubled sequentially, reaching $462 billion at the end of the first quarter. The increase was driven by strong demand for enterprise AI offerings and the inclusion of TPU hardware sales. This statement quantifies the significant future revenue potential for Google Cloud, directly linked to AI and new hardware sales. We are updating our full-year 2026 CapEx guidance range to $180 billion to $190 billion. We are seeing unprecedented internal and external demand for AI compute resources. Ashkenazi clearly communicates the substantial ongoing investment required to meet AI demand and signals a significant increase in CapEx for 2027. Google Cloud operating income was $6.6 billion, tripling year over year, and operating margin increased from 17.8% to 32.9%. This highlights the dramatic improvement in profitability for the cloud segment. This summary aims to provide a comprehensive yet digestible overview of Alphabet's Q1 2026 earnings call, focusing on the key financial and strategic insights.